Alrighty, folks, it's official. Everything is okay. Janet Yellen has spoken, and she feels good about our chances for a soft landing. Anna, I don't know about you, but I saw that and I laughed out loud. It's Janet Yellen telling us everything's okay. Anna, you feel better?
No, maybe I'm a little more scared than I was before I heard it.
Exactly. I feel worse now.
Janet Yellen's also the one that said, absolutely do not worry. Inflation is transitory. We will not have a problem. So she lost a little credibility with me there. I respect that she was one of only a few women really taken seriously as an economist for a long time. And she's had some, good calls, but I do know that she's really from a school of thought that goes along with modern monetary theory. And that is essentially, it doesn't matter how much federal debt you have. It doesn't
Yeah.
matter how much, the
Print,
government
print, print.
spend.
Yeah.
We can just keep printing and inflation will never happen. So what's happening now has proven that theory to be incorrect, that when the government prints, and gives everybody money, it does create inflation. And the necessity of higher interest rates that the governments now have to pay and raise taxes in order to pay for all of the debt that they have. So I think her theories have been proven to be incorrect.
Flawed.
And from that perspective, and the fact that I do still see quite a few, tailwinds in certain areas, but way more headwinds and pain points for the future of the economy. I doubt that we have a soft landing. And I'm not a negative doomer. I'm an optimist. I look for the silver lining, but I think that there is still pretty high risk that corporate defaults, commercial real estate defaults, and the ensuing bank potential failures or integration, one buying the other to get them out of distress. I still think that has a way to work itself through the market, and that a lot more pain can come from that than what she's letting on with that very rosy statement.
Yeah. Again, I laughed out loud because we still have a hangover, right? The 2 years. I mean, there's pains in lots of places. Obviously we've come out against commercial real estate, kind of the I call them financial engineers versus operators, right? Again, my conversation with Ken McElroy on his playlist, I'm like, I don't know about you, Ken, but for a couple of years, you could be a novice, overpay for a property, and look like a genius if you got in and out in enough time. And he actually said, Michael, I've been doing this a long time, and we bought nothing for 2 years. And he was starting to wonder if he was, if he lost his touch because people were overpaying him by 10, 15, 20%. He's like, I don't know how people are making this profitable. And the answer is they're not. So there's a lot of pain coming there. We've seen more and more apartments go bust already. And it's the first inning there. I think the other thing that I think we've proven, again, in modern monetary theory, that you could just print was never something I believed in. And you're right. It's now been proven a comical idea.
Yes.
The other thing I think we've proven, and I've always thought this, but now I think it's true. So I want to get your opinion on this. There's that old story about, hey, go get 100 people on an island, give everybody $100, and, in 3, 4, 5 weeks or months, whatever, one person's got all the money. Right. So how does this transpire? Well, we did helicopter bend. We rained money. We sent thousands and thousands and thousands. We not only rained revenue, but we said, you know what? You don't have to pay your expenses. So it's kind of double dip.
Yeah.
So what happened is we had stimulus ballers or consumers go out and buy stupid stuff, Rolex watches, fancy bags and shoes, because they were flush with cash. And at the end of this day, they're no better off. They got a couple of things they could sell for 50% off or worse, but the rich got richer, right? Yes. LVMH, like Louis Vuitton, the owner of that. These freaking guys got richer. It is mind-boggling to me that we have not learned, from our past mistakes. So that was another thing I think we learned, that if you give everybody money, they're going to spend it, and versus save it or invest it. So it's Kind of wild.
Absolutely. And I think back, I kind of laugh at myself now, but I was around when George Bush gave everybody $600.
Mm-hmm.
I don't remember why he gave everybody $600. I just remember we all got $600. And I thought, what do I want to do with $600? Like, I'm never given free money. And what did I do? I did exactly what you're talking about. I went and bought something that I normally wouldn't have bought for myself. I went and bought myself a piccolo. I've touched that piccolo twice in all these years, right? But I thought, oh, I've got this free money. I need to go buy something I wouldn't. Instead of thinking, let me invest this money and see what it does in all these years in the future, because that wasn't my mindset at the time, right? And so most people are not investors. And this is what a lot of people don't understand, is that you see the stock market still going crazy despite a lot of problems in the economy. And you go, what is going on here? Or people saying, we no longer see a hard landing. The Fed's going to pull this off, because they're only looking at kind of, the richest of the rich and what they're doing. And they're looking at kind of, asset values continuing to go up and hope that things are going to be okay. But the people on Main Street versus Wall Street, 70% plus of the population, they don't have investments. If they do, all they have is a little bit in their 401k. They have very little savings. They live check to check. And so anytime they get extra money, they're thinking, oh, this is our opportunity to spend on something and splurge, because we might not get this again, because they're not used to thinking about investing for the future. They're just like, how can I get immediate satisfaction? And when you're in, psychology, you've gone through this years of pain. COVID happened, businesses shut down, people losing jobs, and then it seemed like it was going to be okay. And then they're given money, and then they hear positive, everything's up. They think that that's just going to continue, so they can blow the money today and it not hurt them. They don't really think about, oh, could there be more pain in the future? Let me save this. And so you have this disconnect between those that are wealthy and those that are not. And things can look really positive from a corporate perspective or from a banking perspective. The wealthy are knowing how to invest and get wealthier, while the people, on Main Street, the day-to-day, we talked about in one of the other videos today, how they're charging more than they ever have at 20+% interest just to make ends meet. They might be spending on experiences, but they're charging it, thinking things are going to, be okay. When they hear things like, we're going to have a soft landing and things are going to be okay, they go into more debt. Then they start defaulting. Suddenly, like you said, I get more money and I don't have to pay my debts. Well, all of a sudden, you got to pay your school loans back. You got to pay those mortgages back. You got to pay all this stuff, and people just can't. And so comments, although well placed by Yellen to help hope that Wall Street continues the boom, really, I think, do a disservice to the people, the 70% of Americans who don't have the wealth, to tell them things are going to keep being fine. So just keep going and spending your money and charging up your cards. And it gives them a false sense of security that keeps them from ever really thinking about, how can I live below my means? How can I pay off debt? How can I then invest for the future? So it wouldn't be my first choice to come out with a statement like that, given where we know most people in the American economy are and where we know the economy could be headed.
Yeah, there's more pain to come, right? We're very early in this. I do think it's fair to say that Q3 is going to be a strong quarter, right? We're right near the end of it. GDP now from the Atlanta Fed still over 5% last time I checked. But it's got to slow down. I mean, it has to. I mean, there's you saw, I think it was Southwest Airlines a couple weeks ago said August bookings were down. So even the experiences, like the last thing that was holding us up, seems to be pulling back. So I do think corporate bankruptcies are just starting. We actually got a note from Citigroup and Wells Fargo today. Citigroup is looking to lay off people. Wells Fargo is looking to lay off people. Again, this whole white collar recession that seemed to come about with SVB and all of that seemed to die down for a while. Again, financial institutions look like, that's it. I would not want to be working at a bank today. It's going to be bad for the next couple of years.
Right. And it's difficult because when you look at things just like GDP, right? We try to time where is a recession, 2 quarters of negative GDP. Just like the S&P is made up of most of the increase in S&P is made by just a few of the S&P 500 companies, maybe the top 10.
Yeah.
So you've got 10 that are, very, very positive, and then all the rest are negative, but the net is still a positive. When you look at GDP, it's very similar. There's so many factors of GDP. And if one quarter we had positive GDP and the entire positive GDP came from auto industry doing well, everything else was negative, but there was enough of a net effect from the one industry that made the number positive. That doesn't mean it's a healthy economy, nor does it mean that the entire stock market is healthy, because a few of them are floating the market. So when you look at GDP, although we had a 5%, if you pull back the layers and you look at, where were we up versus where we were down, we were way up in a couple sectors, but they're now showing pain this quarter versus last quarter. And so GDP is somewhat of a lagging indicator. It doesn't take into effect where things are happening now in different sectors that could bring the whole thing down. So when I look at all of the numbers, just like the NBER does when they date recessions, almost everything is recessionary. We just have just enough GDP from a few areas, where consumers are spending, for example, and just enough of employment that it's keeping it from technically being recessionary. So we almost have like this floating recession, right? This rolling recession that,
that's
okay,
exactly what
it's up a little bit, but there's all these other areas that are already deep into the pain. I mean, look at trucking and manufacturing and all kinds of other, the housing sector. Look at how many mortgage officers have been laid off and construction workers have been laid off. Like, these pain points are coming and then they're lasting, but there's just enough to keep the whole economy from being technically in a recession, though most people are feeling it like we're in a recession already today.
No doubt. I think one of my good calls this year is this is going to be a rolling recession, a la 1990. A lot of people watching this on YouTube didn't experience the 1990 recession. It's the last three recessions have been, the 1990 was very much a rolling recession. So there is a chance, giving like housing. Housing has been a net negative to GDP for 7 quarters, I believe.
Yeah.
I suspect in Q3, maybe Q4, it actually turns positive.
Yeah.
Right? Because again, construction is up so much and transactions have flatlined, right? Which, even more is, dude, mortgage apps, we're up 1% week on week. That's wild to think about when we are 7 and some odd percentage, right? But again, they're up 1% on a small number, but still, I think the chances of a rolling recession and not getting the 2 quarters of negative growth, that would be my call. This whole rosy, we're going to get the soft landing thing is, that's rainbows and unicorn stuff. But if she came out and said, you know what, the economy has some bad segments and good segments, and the good's doing really good, the bad's doing bad. We may get through this with below trend growth. I'd be like, kind of believe that.
Right. And I, some of the difficulty is the numbers that so many, are published, like the headline numbers are all, where are we compared to last year? But last year was so artificially up that big downs don't necessarily mean a lot of pain, but in certain sectors, a big down could mean a ton of pain. And so the numbers are skewed unless you really look back a couple of years and saying, what's the trajectory of that we're going on versus where we were over the last couple of years? And is it getting better or worse for the American people? And regardless of if we technically skate by without a technical recession, most everything is recessionary now, and people are feeling the pain now, and the pain is not over. And so,
not over.
I've started to give a little less credit to were we technically in a recession at a certain date or not, and what is really happening throughout the economy. Is it getting better or is it getting worse? And all of the data, Michael, tells us that the economy is getting worse.
I agree. Anna, where can people find you?
You can find me here on your playlist, and you can find me at social media, Anna Kelly, REI Mom, and my website at reimom.com for coaching and consulting.
Thank you so much.